everybody. Uneducated Economist here. The Federal Reserve delivered on their quarter percentage interest rate cut. Yeah, they delivered it with a message not to expect any more, and the markets hated it. Of course, they got over it today. We're now see the U.S. Treasury 10-year under 2%. It's like 1.95 or something like that. Anyway, very interesting stuff taking place inside of this markets right now. Everybody is expecting the Federal Reserve to go back into like this quantitative easing program to weaken the currency to make our exports stronger, I guess. If you weaken your currency, then your weak currency now allows foreign investment to come in and buy your products. But what's happening around the world is the rest of the world is weakening fast, and the U.S. dollar is strengthening. Go to USDebtClock.org. Go to take a look at the USDebtClock.org and go to the lower left-hand corner of that website, and you're going to see down in there the M1 money supply, and take a look at that number. It is shrinking. Okay? And at the same time, if you just look over a little bit, you'll see the U.S. Treasuries and the amount of issuance. Look at the pace of that compared to the amount of U.S. debt held by foreign investors. And you're going to see that U.S. debt held by foreign investors far outpaces the amount of treasuries being issued right now. See that M1 money supply up there that is shrinking? That's like essentially the liability side of the Federal Reserve. Those are the dollars that we have in circulation. And that is shrinking. That's the pool of liquidity getting smaller. So the dollar is strengthening both on the pool of liquidity that is shrinking and the demand for U.S. treasuries coming from foreign investment. See, when these guys want to buy those U.S. treasuries, they have to get dollars first. And in order to get those dollars, it adds strength to it. So the more demand for the U.S. treasuries coming from foreign investment, the bigger demand for the U.S. dollar. This is very much the milkshake theory taking place. Now, the idea is that in order to drop your currency enough for foreign purchases to come in and buy your products, in a weakening global economy, and you're the strongest one, you have to weaken your currency beyond theirs. See, everybody's calling for zero interest rates out of the Trump administration. Even the new gold bug Judy Shelton, right? The newest member, is she actually a member of the Fed now? Anyway, she's calling for zero interest rates, right? Everybody wants these zero interest rates in order to weaken the currency so that we're on a level playing field with the rest of the world. But yet, right now, we see quite the opposite taking place. See, Donald Trump talked about a strong dollar before he was president. And it's taking place. You wouldn't think that it would, considering that he is demanding a weak currency, but yet that's what's happening. See, is it a mass game of reverse psychology? Or is it just simply because the dollar is going to get strong compared to the rest of the world? I mean, we are the world reserve currency. That's not going to change tomorrow. It might change over time, but as of right now, that's the case. And when people get scared, they flood to the safe haven asset of the US dollar. And if you're going to buy the US dollar, you want to buy it with an interest rate. So you buy US debt. These are some of the things I think about. Go check it out. I'll leave a link down in the description for you guys. USDebtClock.org. Go down there, take a look at the M1 money supply. Take a look at the amount that it is shrinking. Go look at the U.S. debt issuance. Go look at the amount of U.S. treasuries being held by foreign investment. Right? And keep an eye on those numbers. And then go look over at the trade deficit too. That's not too far away from those numbers. It's just over a little bit more to the right. And you'll see that the trade deficit with China is shrinking. Now, the global trade deficit is growing. Okay. But we're beating the hell out of China. They're desperately seeking trade with the rest of the world. And they need US dollars to do it because the rest of the world demands dollars. Uneducated economists, you guys let me know.